All right, let's get right into it. If you're a licensed professional in California, maybe a psychologist, a physician, a dentist, and you're at that point where you're asking, what's the next big step for my practice? Well, you are in exactly the right place. Today, we're going to build a strategic blueprint for forming a California professional corporation, and it's designed just for you.
So, does this question feel a little too real? I mean, if you're drowning in 1099s, your tax bill seems to get more complicated every single year, and you have that nagging thought, are my personal assets truly protected? You are definitely not alone. These are the exact headaches that push professionals like you to find a smarter way to structure their business.
And look, this isn't just theory. Let's make it real. I want you to meet Doctors Alex and Maria Valdez. They're a perfect example. Two California psychologists, both running successful practices, but separately. And between their different income streams and growing concerns about liability, they just knew there had to be a better, more unified way to do things. So let's trace the exact path they took.
So the solution to all this growing complexity is a very specific and, honestly, a very powerful tool. It's called the Professional Corporation, or PC for short. Now, don't think of this as just some other business entity. It is a strategic move designed to protect what you've built and to help your practice grow. So why even go through the trouble? Well, because the benefits are significant. A professional corporation can truly optimize your tax situation, and I mean, often in a really dramatic way. It creates a legal firewall between your personal assets and your business debts. It makes your life simpler by letting you consolidate all those income streams. And, let's be honest, it enhances your professional image, which is a real asset in any field.
Now, I need you to lean in for this next part because it is absolutely critical. In California, if you're a licensed professional and you want to incorporate your practice, you must form a professional corporation. You cannot form a standard LLC. You can't form a general stock corporation for your licensed work. This is a non-negotiable, hard and fast rule, and getting this wrong is a very costly mistake to fix.
Okay, now that we have that crucial fact locked in, let's start laying the foundation of our blueprint. These are the core rules that you have to get right from the very beginning.
First up, ownership. And California has this really fascinating rule that actually encourages collaboration. See, for a psychological corporation, at least 51%, the majority, must be owned by licensed psychologists. But the other 49% can be owned by partners from other approved fields, who are called allied health professionals.
So you're probably wondering, who are these allied professionals? Well, the list is actually pretty broad, which is great for building a collaborative healthcare model. It includes people like licensed physicians, registered nurses, MFTs, clinical social workers, chiropractors, and a whole bunch more. This really allows for integrated practices, just as long as the primary professionals keep that majority control.
Next, let's talk about what you're going to call your new corporation. California is very strict about this. They have what's called a name-style rule. And the purpose is simple: transparency. Your corporate name has to make it immediately obvious to the public what professional service you provide. No ambiguity allowed. Let's make this super concrete. A name like Valdez Psychology Group, a professional corporation, is perfect. It works because it clearly says psychology, but a name like Valdez and Associates Consulting, that's going to be rejected. It's just too vague. The state wants zero guesswork when it comes to what you do.
So, to be compliant, your official corporate name has to include one of the state-approved magic words for your profession. For psychologists, that's psychology, psychotherapy, and so on. And you also have to cap it off with a corporate designator at the end, something like Inc. or PC.
Okay, so you followed the rules, the corporation is formed correctly. What's next? Well, now it's about operating it smartly. This is where strategy really comes into play, for your brand, for your liability, and of course, for your taxes.
What if your legal name is a little clunky for marketing? No problem. You can file for what's called a DBA, or Doing Business As. This gives you branding flexibility. Your official name might be something like Vision Psychological Services PC, but you can operate publicly as Trauma Recovery Psychotherapy as long as that DBA also follows the naming rules. Now let's get really clear on what limited liability means, because this term causes a lot of confusion. It does not mean you're immune to everything. You are protected from the business's debts and from the malpractice of a partner. But, and this is a huge but, you are never protected from your own professional negligence. That's why your real shield, your primary line of defense, is a solid professional liability insurance policy, often called an E&O policy, held in the corporation's name.
All right, let's get to the part that gets a lot of people excited: the S-Corp tax advantage. This can be a total game changer. As a sole proprietor, every dollar of profit gets hit with that full 15.3% self-employment tax. But check out the S-Corp model. You split the profit. You pay yourself a reasonable W-2 salary, and only that part gets hit with those taxes. The rest of the profit, you can take it as a distribution, which is not subject to self-employment tax. The savings can be huge.
However, and you knew there'd be a however, there's a key rule here. To unlock this amazing benefit, you have to pay yourself a reasonable compensation. This is basically the fair market salary the IRS says you should get for your work before you take any of those tax-advantaged distributions. You can't just pay yourself a $1 salary and take the rest. The IRS is wise to that game.
So what counts as reasonable? It's not just a guess. It's a data-driven analysis based on real factors: your credentials, your years of experience, your location, your specific role in the practice. This is something a good CPA can help you document, creating an audit-proof shield that justifies your salary and protects your whole tax strategy.
We've covered a ton of ground, so now let's distill all of this into a high-impact section focused on what to avoid. These are the most common and, frankly, the most costly mistakes we see professionals make during this process.
So here they are, the top 3 mistakes you absolutely must avoid. Number 1, forming an LLC for your licensed practice. We've said it before, but it's that important. It's just not allowed in California. Number 2, forgetting those required magic words in your corporate name. The state will just reject your filing. And number 3, guessing at your reasonable salary. This is a huge red flag for the IRS that can completely undo all your tax savings.
And there you have it. You now have the blueprint. You understand the rules, the strategies, and the pitfalls to avoid. So let's talk about putting all this knowledge into action.
Your path forward from here is a clear 4-step process. First, clarify your goals. Think about ownership and branding. Second, and this one is non-negotiable, assemble your expert team of legal and tax advisors. Third, gather all your key documents, like your professional license. And finally, with your team's guidance, you execute the plan and file with the state.
We've covered the what, the why, and the how. A professional corporation is such a powerful tool for financial efficiency and legal protection. So the final question isn't for me, it's for you. Now that you have the blueprint, what's the first strategic move you're going to make to build your professional future?
Ready to form your California Psychologist Group Practice Corporation? Schedule a consultation with Incorporation Attorney today and get expert guidance on compliance, shareholder rules, and tax strategy.